NFP. So what we're going to be doing is we're going to try to set up a pending orders, pending trades. This is by asset price when the time comes. And this is probably going to be something for like a small amount, maybe around $20 for a buy and sell, because we do expect a massive impulse to, well, to move the euro dollar in the real market. And essentially, we don't need any kind of indicators because we know exactly right down to the second when which asset is going to create an impulse by going to an economic calendar. And essentially, I don't know, we could actually do something like this for this entire week. And let's take a look. I think that, yeah, we're looking just at high impact events. For example, oh, let's actually switch over to the browser. There we go. We're looking for high impact events. That's why I deselected, right, the little filter right here in this particular site. Deselected this, apply filters, and you got this. Just make sure that you got the right time zone. This is something that's also selectable. And I think that, yeah, mine is, GMT +3. So there we go. And when you click here, we can select essentially what kind of period we wish to take a look, right? So there we go. Last week of previous month, new week, or essentially first few days of this month. And we actually are able to kind of go back in the past and understand that this is something that gives you a massive, massive advantage. I mean, check it out, right? So we have, today's Friday, there we go, at 3:30 p.m., or this is going to be in approximately, I don't know, around 9 minutes from now. Actually, 6 minutes until the release. There's going to be a timer right here. For those who are new, the most impactful kind of statistic is the difference between the forecast, this column, and the actual, this column. Right, so the forecast for the NFP is much lower than the previous month, right? So there was 228,000 people last month who got their first salary. There we go, 8 minutes actually. I said 6, but there we go, 8-minute countdown. So the forecast is going to be 130 plus, right? So it's a big, this is a relatively big discount. So forecast, it's a kind of like a prediction without full data available. So there is a bit of a prediction kind of, I don't know, situation here, but the forecast and the actual number, this something that's going to be counted more than the previous month. So for example, 138K is predicted, but if it comes out 165 or like 180, it's still going to be considered a positive statistic. It's going to be considered a positive statistic, and dollar is going to gain strength, even though it was not so, well, a little bit lower than the previous month. However, the more ideal situation, if it was actually lower than 138, if it came out, if it comes out like 110 or something like that, then this is something that's going to be considered a very, not necessarily surprise statistic, but it's going to be more weighted, right? It's not going to be as the reaction in the market is not going to be as quick. Usually, this is something that gets played out within 1 minute, right? There's a spike followed by a retracement. But while we're waiting for this to happen, we might have, just a few minutes to kind of take a look at what happened yesterday. Look at this. At 3:30 yesterday, we had unemployment claims, right? And look, this is a weekly statistic. It's not as weighty as the monthly statistic, certainly not as weighty as the quarterly statistic, but nevertheless, look, it was lower, right? 241. Actually, this is being a higher number, but this is bad because this, for the economy, because this shows how many people in America asked for the government assistance, financial aid, right? So if we go to the platform and we take a look at yesterday's, right? Let's go back to yesterday. Right, what do we got here? There we go. But this is a little bit before midnight. We need to look at 15:30. There it is. There's this beautiful candle. See, there was considering the previous ones were significantly smaller, you can understand that this is, relatively impressive, right? So there was a spike, And since statistic was maybe actually a little bit more impressive than, some people might think, the retracement actually came back on the following minute, right? So this is something that we also need to keep in mind. We know ahead of time which country will release what kind of macro statistics. It's kind of like going to a general doctor and getting, kind of general understanding what's going on with your health. It doesn't mean that you're going to be like, if you miss a day of, good sleep, it means that that's it, have to write a bucket list. But it also doesn't mean that, if you eat a green apple is going to be something fantastic. These statistics, they all together, they give you a sense of how good the economy is. Now, as I mentioned, yesterday's statistic was bad for the dollar, right? There we go, the USD, and that's why we see that, because it's a secondary currency, not the primary, because bad news, the dollar essentially is kind of like a seesaw, pushed the euro upwards, right? And, well, retracement happens, and I've been mentioning this all the time, often enough. The reason why retracement happens, right? So what happens is that here somebody opens a position and whoosh, right? They buy the position based on the statistics, or I'm sorry, open the positions based on the statistics. And since this was a bad thing for the dollar, the euro kind of went up, right? But at this point, right, if we kind of take a look right here at the numbers, right, at the quotes, approximately 13 1 right 1 7, right, 13.17, and this was 13.38. Not really a lot, right, about 20 pips, but in forex this is about 200% profit already, with a leverage of like a standard lot, with a leverage of like 500. It's a different instrument that works a little bit differently, and unlike binaries. And, well, there we go. You made 200%. You're like, you know what? That's fine. That's good enough for me. So when you sell, or rather close the position, you actually consider that you're selling the position. When you open, you're buying. When you're closing, you're selling. And when you're taking your money out, it is a sell. You're affecting the supply and demand principles, and this thing retraces. So, anyways, let's take a look. We got, how many more minutes? We got 2 minutes and 50 plus seconds. So I'm thinking that we got 1 minute, we got 1 minute intervals. We're going to have a 60-second timer, right? Because there should be a spike, and within that, after that, within the 60 seconds, it should close a little bit lower. Remember that you are able to adjust this to kind of fit your preferences for the expiration. That's why actually I love Pocket Option. It does offer this wonderful flexibility. On some brokers, you can't really choose the expiration. What if your strategy revolves around 65 or 70 seconds, right? On the 60 seconds, you're actually going to have significantly different statistics than if your approach works, kind of in favor of 70-second expiration. But this is something that you can monitor, deduct through logic, math, statistics, and apply it here. All right, what do we got? Do we got less than, nope, we still got, there we go, less than 2 minutes, 1 minute and 50 seconds. So when this candle closes on the following one, there's going to be that spike. Actually, look, we actually have a relatively decent trend level, or kind of like a resistance level forming. There we go. We got 1, 2, 3, and potentially this could kind of bounce away a little bit or have like a false breakout. But this is actually where a very good example that technical analysis right now will take a back seat. All right, so it doesn't matter if this is breaking out and you're like, oh man, I should jump in and buy. But the news comes out, it's like maybe a wonderful statistic for the dollar, the euro is going to tank, and whoosh. And that's why fundamental analysis is at the driver's, it's behind the wheel. It's the driver of the market. But it looks like maybe we have a retracement. There we go. Look at that. 55 seconds left. There we go. 50 seconds, right? So we got this going for us. So let's take a look at our pending trades by the asset price. There it is. And we got Z. Let's put it into a 10. And once again, I'm going to open maybe like 3-4 pips higher, 3-4 pips lower, a buy and sell position. Just so some of you have been asking for this particular kind of approach. We know there's going to be an impulse, and we give it. So there it is. There's the actual price 3.6. So let's take it to 4.0, and we're going to buy. And since it's 3.6, let's go to 3.33 for a sell. There we go. All right. So what's going to happen is that it seems to be. Oh, there we go. Oh, there it is. 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 And let's actually maybe open a slightly bigger position here for a $100 and retracement. Did I didn't make it. There we go. I was showing you the expiration with the flag. And I should have opened a little bit sooner. There we go. This is something that, man, I mean, I might actually have to do something that I usually don't. And if it pushes down a little bit here further, see, got a little distracted by the situation. So, anyways, we're gonna close the position that is not activated by, right, the open position that was for a buy. It wasn't activated, right? The sell position was activated as soon as the asset reached this level. And so there we go. We got still, yes, I still think that there's going to be a retracement. There we go. So we got $18 that were essentially the $10 position that we opened for a buy and sell. It was activated. And because I was kind of showing you a little flexibility of pocket, I kind of missed out on the timer, on the ideal entry. So I lost $100, but I still believe that there's going to be a retracement, and within, as I mentioned, 35 seconds or so, there should be a, kind of like a pullback. Now, let's take a look at statistics. There we go. So the stats are 177. So it's a good thing for the USD. That's why Euro kind of gave us a tank. Whoosh. Right? And that's actually kind of standard situation that we have. So there should be a spike. There is going to be a retracement because people are taking out their money. There we go. So I didn't really enter with $100 at the ideal moment, but I did make my money. So let's take a look. Once again, remember that here I opened two positions, right? One for buy, one for sell for $10. And when it shot into one direction, it activated the sell while the buy was still active. So I went into the open trades and I closed the one for buy, and the sell one gave me money. Because I kind of goofed up a little bit here, I lost 100, but as you can see with the profitability, which is not really high at the moment, I was able to get back my $100 loss and still $32 in profit. Now, sometimes people ask me whether, this is something, why don't I play with bigger numbers? My balance kind of allows it. This is where we need to understand that this is something that's individual to such an extent. Nobody can tell you what kind of goals you should have from your financial independence understanding or feelings, right? So for somebody, $500 a week is something that's like so incredibly, I don't know, lucrative or profitable, because essentially you can do that here on Pocket within like, maybe half an hour worth of your time. And so this is something that is personal. Now, for somebody, $500 a week is really like just like lunch money. Really, it's not really anything. So I prioritize stability and kind of like security to my capital. I'm not chasing, I don't know, golden mountains and have like, I don't know, Bugattis and their, private jets for now. Maybe this is something that's going to go into that eventually. But anyways, this is something that, I take pride in when we trade together with you guys, with my students, with my VIPs. When we trade, I explain this and we adjust all of these things to fit your goals, your psychological fortitude, your, I don't know, strategy, statistics, right? I mean, how many times have I shown you that, oh, my internet maybe is clonking out a little bit here, but irrelevant. Here you'll be able to see that there's top traders that have statistics that's like lower than 50% success rate, and they're still winning, they're still making money. With proper money management, with based on your statistics, your performance, I help you build plans that will get you to the profit land, right? The promised land. So anyways, if you guys want this one-on-one training, it is available. I can put my money where my mouth is. I can even insure your trading from 20 to even 80%. This is something that, you know, you and I would be able to cover separately. And as I mentioned, market is not chaos. This is a wonderful instrument to help you grow your capital, grow your financial independence. It's just that you need to know what you can demand of it, and there's always, always a factor of time. This is not something that usually comes, you know, signals just because you can open 12 signals per minute. It doesn't really mean that you should. There has to be a specific kind of reason to open a position based on logic, math, statistics. This is something that, once again, we go into greater detail one-on-one. So subscribe to this channel, my dear friends. You hit me up in Telegram, talk to me. I'm here to assist. I burn with passion for these kind of discussions. And based on logic, math, statistics, I will take you through this step by step if necessary and show you and prove to you that you are quite capable of making money. Just we need to maybe adjust a few things in the meantime. So, again, let's summarize. A spike followed by a retracement. Statistic was actually good enough if there's a continuation. Statistically, historically speaking, this is something that you can monitor as well. You can actually see that in historical past. Now, I will be doing these kind of videos every single NFP. Next week, let's take a look at next week, which is actually quite important because usually the week after the NFP, there is a CPI. Second most popular statistic of the month, and let's see if we can find it on this month. Nope. It might in this week rather. I think that because of some holidays, it might carry over to the following week. There it is. So, where NFP is the first most popular statistic of the month, CPI is going to be the second most popular statistic of the month. In May, we're certainly going to be doing a stream here. But let's take a look, you know, see when you guys are going to be able to get together with me next week. Let's see, federal funds rate. This is actually the coup de grace, I guess. This is the culminating factor of all of the other macro statistics that would push the federal government, right, the head of the federal, or kind of central banks, Jerome Powell, to announce that they're raising or lowering interest rates. And I think that this is also something that's very important. So it looks like maybe Wednesday we're going to get together and at well, 9 o'clock GMT plus 3 times. So for Americans, this might be around 1 o'clock lunchtime. Join me if you can, please. Once again, I want to show you that market is not chaos. I can prove it to you. So don't rely on luck and intuition. My friends, thank you again for joining me. Thank you for sharing your time with me. I, very much appreciate it. Would be super excited to see some comments in the videos once it's posted, and I will answer to each and every one of you individually, personally. So hit me up, hit that subscribe button. Let's make sure that you're making money based on logic, math, and statistics. See you guys later.